Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's March 5th. This will be our chart lesson for the day, and another wild and crazy ride today. I imagine this is going to continue for a little while. Really, we had the same type price actions we had yesterday, just in reverse. Yesterday, we traded up, had this little correction in the middle, and then made a measured leg up, and believe it or not, we traded down today. I'm not measuring from the very top. I'm just measuring from the top today. That's the high for today. It may be hard for y'all to see this, but there's your cutoff day right there. So I'm measuring that, and you look for a measured move, and you can see we basically got a perfect measured move again today. And so once we started going lower here and broke lower, that's what you want to look for. We traded down and kind of got stuck in this range, but that's what happened yesterday. We traded up and got stuck in a range, and then ended up going higher. It's kind of odd though. Yesterday the resistance was keeping us from going higher instead of the support, and again today, even though we're trending down, the resistance was keeping us from going higher here as well. And then we broke out, failed, and turned down, and it was just a real quick ride down for the majority of it. But we ended up getting that perfect measured move almost before the day was over. So I'm going to back out. We'll go through the trades. This is going to wrap it up for the week. No chart lessons on Friday, so nothing else this week. There's a possibility spring break starts here for on Friday's the last day of school, and so they're out all next week. And I may take Monday off. I'm going to take my kids somewhere this weekend, so I may take off Monday. I'm not sure yet. If we come back Sunday, I'll work Monday. But if not, I'll probably, we may end up staying till late Sunday and not come back till Monday. And if that's the case, I'll probably just take off Monday because I won't feel like coming in and doing a chart lesson just for that. If I'm not going to be trading, I probably won't do a chart lesson. So if there's no chart lesson on Monday, you'll know why I took the day off to spend it with my kids during spring break. So anyway, let me back out here one more time, just to talk about this a little more. Again, you got a clear two-tiered channel working lower here, and it did come in handy right here after they open. We move on down, and you finally get the break. You get a couple of legs up. There's a leg, a little two-legged correction, another leg, and then we started down again, and we got that measured leg. So, but this was a clear two-tiered channel early on. However, from when we came in, mostly going forward, this was all kind of flat. We're making higher lows here, so there's no consistent. So it was hard to call it a range. You had some strong resistance right here. And we actually broke out once and then made that second leg up and broke out again and failed, and it was off to the races down. So prices wanted to try to fill that gap. That's what this red line is. There's a gap on the daily chart there. And that's where prices closed yesterday. But as you can see, we never even really got close. Well, I shouldn't say we didn't get close. On a day like this, that's pretty close. But we still missed it by, a long shot. So, but let me back out. We'll go through the trades, and as usual with all these trades and stuff, I'm going to move through them pretty quickly. If I get through them quick enough and have enough time, I want to talk a minute about failures. Just in case I don't have enough time, I will say it right now. I have to talk about everything in the videos because there's different people at different levels of skill levels doing this, and so it's not all just for beginners. I've got some people that have been doing this for a long time, been watching the videos for a long time, so I talk about everything. Most importantly, I talk about failed second entries, and they do make great trades, but the problem is if you don't quite understand a second entry, you're going to get all confused and you're going to mess up, and you're going to make it that much harder for you to learn second entries. And I've gotten 4 or 5 emails from 4 or 5 different, actually I've gotten more than 4 or 5 emails, but I've gotten emails from 4 or 5 different people just in the last couple of days really struggling with failed second entries. And the reason is because they don't quite understand second entries yet. And they, everybody, I don't want to put anybody on the spot, or I'm not trying to talk bad about anybody, but it's harder to learn than you think it is, and you're not, most of you aren't smarter than the average person, even though you may think you are. When I try to tell people just to forget them, they don't want to do that. They want to learn it all as fast as they can. They think it's going to speed up the process. But trust me, you're not going to get there any quicker by forgetting about failed second entries for the moment. You would be much better served to learn to read this chart and to find the trends in the first and second entries with the trend, and forget about the failures. And because once you learn second entries, the failures are almost automatic. They're easy to see, but trying to learn them both at the same time is very, very difficult for most people. And really, second entries are super simple, but for whatever reason, it's just hard to describe them in wording. And even with all the videos I got out there, people still struggle with them, and it's because most people try to make them too hard. Is the reason most people have trouble with them. And there are some slight nuances that I talk about in the videos occasionally, the hidden second entries and stuff like that. If you hear me say that and you can't figure it out, just forget it. Don't spend a lot of time on it. Just pass that up and say that's more advanced than me. I'll worry about hidden ones after I understand what a second entry is. And once you understand what a second entry is, the hidden ones will make perfect sense too. And just again, I'm not talking to any one person, because there's 4 or 5 of you that sent me these emails, and I get them consistently week after week from other people. So that's, I probably should talk about this more often in the videos. But I really think you'd be better served to forget about failures. Work on everything that's in the manual first, which is the second entries, finding the trends, drawing your trend lines, and all that stuff. And all this more advanced stuff, where the failures and the traps and all that stuff come later. And if you follow the right progression, it'll be a whole lot easier, and you'll learn a whole lot quicker, I promise you. And I say that because a lot of people think they understand it, and they don't, and they're sitting out there trading and practicing the wrong thing. And then after they've done that for a month, and finally they come to me and they say, I just don't get it. I thought I had this, and I explain it to them, and then suddenly the light goes off, and they say, I've been doing the wrong thing the whole time. So seriously, I think for all of you that are struggling, if you're new to this, just forget about failures, forget about hidden second entries, forget about the more advanced stuff. Concentrating on finding second entries with the trend, and just recognizing when prices are flat, like right here and in a range. And if you can recognize those 3 things, you're right there knocking at the door. And it's just a matter of time till you can get a little better at it, and the rest of it will start to fall in place once you get those things down. So anyway, enough about that. Let's get to the trades, because I'm already 8 minutes into this thing, and we got a lot of them to talk about. So 7 o'clock came right on this little jog down here. And really, you can see there's 2 legs down right there, and a little 2-legged correction in the middle, which usually means the 2 legs in the middle is usually the center of the pattern. So you got 2 measured legs down here, and then you turn up. So it's the second entry on a bigger picture turning up here, and it just turns down right off that midline again. And this actually breaks higher, turns and goes out the other side. Just go short right there. If you waited for this one to close, you probably didn't get in this trade, because it just gapped, took off, gapped, took off. It did back up a little finally. This was a quick, easy move, and if you catch this very first move, you're going to get a runner, and you can probably be done before this move's over. So if you were here by 7, you could be done by 7:30 on one trade with one runner here. So that's the beauty of catching one of these things early and getting a runner. And I mean, that's a beautiful setup. So in a bigger picture, you could call that a failed second entry long. It's just a first entry here, counting off the lows, because there's your new low. That low's lower than that one. So that's a count 0. So you're moving up, and when it breaks lower right there, that's a first entry. But you could call that a triple test almost. It's just right off that main midline. And it's just, when it broke higher and turned down and went out this other side, it's probably trapping a lot of people that are trying to get long in here, trying to catch a bottom, because we've been trading down, and they think they're going to catch a bottom here, and they don't know how this thing works. And the other clue is we're making lower highs each time right down that midline. You'd be surprised how many people don't even know what a midline is. They don't even have any clue that's there. but you got a high here, you got a lower high, a double top, which is just another lower high, then another lower high, and it's just working right down that trend line. That's a beautiful entry, and you can be done early. But anyway, we bounce. You could call this a new low because there's a double bottom. You're moving up first entry, and so there's a second entry short right here. I didn't mark this one. I should at least mark it red, but you could argue for this. I mean, I should at least mark it green, but you could argue for this to be red. The reason I don't like it is because it's right back into the EMA, and we're not back to the midline yet, much less when we just came off the lows. So we may, and we came off of them a couple times here, so we're way overdue to go back to the main trend line. So I'm a little leery of that one, but it's a lower high. You got this trend line working up. You get a break, new high, nice bearish bar. That's a great entry. And that's another thing. People ask me what I mean by a good signal bar. And they always ask me about the stems or the feathers. The only reason we use candlesticks, there's nothing magical about candlesticks. I don't care what you read. I don't care what anybody tells you. I don't care anything about candlesticks. None of that. It's all hogwash to me. That's my personal opinion. You know, I don't want to offend anybody. Some of you may believe in the power of candlesticks or whatever and all the meanings that they have behind them. I don't believe in any of that. I don't care about any of that. The only reason we use candlesticks is because of the visual representation they give. They're very visual candles. It's real easy to look at this chart and tell what's a bullish candle from a bearish candle. And when you're trading the chart and trading by vision, that's important. So that's why that's the only reason I use candlesticks. And that's the only reason I suggest you use them. Otherwise, I don't care anything about the meaning. You go read what hanging this or they got all kind of names, so I can't even think of them right now. But I don't care about any of that. None of that means anything. All I care about is I'm wanting to go short. Is this a nice bearish signal bar? If it is, which this one is, it doesn't close right on its low, but look how bearish that is. It opened here, traded up, and it ends up closing way down here. That's bearish. That's what I want to see for my signal bar. And if I'm going long, I want to see a nice bullish bar like this one right here. This one opened here, traded down, turned back up, and closed almost on its very high. That's a nice bullish bar. There's another one on a higher low. I'm not saying those are good entries. I'm just pointing out for signal bars. This is a very bearish signal bar. This thing opened here, traded all the way up here, but before it closed, they beat it all the way back down. That's bearish. That is neutral. Look how neutral that bar is. It opened and traded both ways, but opens and closes in the middle. Very, very neutral bar. And so that's why I like Japanese candlesticks, just because of how easy it is to look at them and know if they're bullish, bearish, or neutral. And you can't do that with regular bars because you got to look at them real close and say, okay, this opened on down here or up here, and on this side it closed. It's very difficult to do, but with this, it's so quick to look at all this and know what's bullish, what's bearish, and what's not, and what's neutral. And so past that, so the stems or feathers or whatever you call these on each side of the bodies, they don't mean anything. I'm worried about the highs and the lows. Only thing that means to me is that's a bearish bar because it's all the stems up there and it closes way down here. But otherwise, you got to count the stems. So all the questions about the stems and so forth, I'm getting those almost every day lately. The stem is part of the bar, so we're not looking for the break above the body. We're looking for a break above or below the full bar. So forget about the stems. They don't mean anything. They're part of the bar, basically, is what I guess I'm trying to say. So yes, you count those in for your break. So in other words, if we're looking for prices to break above this bar to go long, we're not looking at the body, we're looking at the full bar. So it has to break above that high right there, which is 30.44. So if this bar breaks above it and we're looking to go long, then there's our trigger and we're going long right there. So I hope that makes sense. But anyway, back to the trades. I think we talked about this. We talked about this when we're moving down, and we're working down this trend line right through here, and we actually get a pullback right here. This actually breaks higher again, turns and goes out the other side. Just go short right there. You're getting a little close to these lows, but there's still plenty of room. And it doesn't matter. We drop way on down lower anyway. But you still got enough room to get out there. So then we bounce. We're coming back here, and this has been a really strong downtrend. Look at this. So you're not looking for any longs yet. So forget about longs for right now, because this is a confirmed two-tier channel working down very steeply. So, and even though there's a good bit of room back to here, you don't want to be taking any longs. So we bounce back up. Notice this trend working up. We get a close outside, a couple of legs up. Not a good enough signal bar there. You're probably better off to wait on the lower high. Look how it pushes through the EMA, pulls back, and this closes through. Nice bearish bar. Doesn't look like much of a move, but that's 4 or 5 points right there. And then it bounces. If you got a really good signal bar here, you might treat that as a failed second entry, or you might treat that as a second entry long and go long right there. But that signal bar is too neutral. I don't like it, even though you're expecting prices soon to come back this way. But now we're working up again. You get a break, you get a lower high here, not a very good signal bar. And then finally you get another lower high here, basically a failed second entry long. Notice that new high right there. The count is 0 because that's a new high. It's higher than that high. So your count 0. You pull back. When it breaks high right there, that's the first entry. And then you head down here again, and you come, when it breaks back the second time, that's a second entry long. We're not looking for longs though. We're looking for shorts. But if we see a failure like that, and then on top of that, we not only turn down off the trend line and we get a bearish bar, that makes it even better. So that's a nice short right there. Then you start to see this support building up. So now you got to be careful on it. We get another lower high right here that I wouldn't be afraid to take in most cases in a really right off the key entry point. But that support's gotten too strong right there. I would wait. And then we turn up again. And look how bearish that is, and now you got enough room to get out, so go short right there. And it actually pulls back again, and now you got a second entry short. Technically your second entry short was right here. Notice that new low, then first entry, and you come up. So that's a second entry short as well when it breaks lower right there. It's another reason I like that one. It's a failed second entry long. It's a second entry short. You got enough room. But really, you could count that as a double bottom. Even though they don't make equal lows, that's strong support. That's a double bottom right there. So first entry, and when it breaks lower right there, second entry. Even if you don't like that, it's a lower high off that new high right there. Notice that bar made a new high, so now you're count 0 on the counting the other way. So that's a first entry, and then there's a second entry right here. But I don't like going short there on that one. When it comes back here, and retest this a second time and makes that big bearish bar though, and actually I drew this trend line right off here and I drug it up to here, and when it comes back there and makes this perfect setup with that big bearish bar, just go short right there. It actually breaks higher and makes a lower high right here, but I'm not as crazy about that one. We're starting to get away from the EMA. Same thing. Actually, notice this new high right there. Actually, you didn't make a new high right there. I take that back. So forget that. But you're working down here, making lower highs each time. That's another nice setup, and you do have room there, and you're close to the EMA. So, you know, you could argue for that one to be green. But like I said, I've been saying for the last few days, you're going to have the opportunity to, you know, say, hey, a bunch of these, I like these, or I could, you know, what about this trade? And I may not mark it because there's better trades. There's going to be really good trades that come along. So why risk something questionable? So, I mean, we've moved a long way down right there. It's time for a correction. And even though we went way on down, notice it wasn't long after we had a correction. And that's why you have to be careful. The further you start to move down, and that's where most people make their mistakes. That's where most amateur traders screw up. They want to see real good evidence that we're moving lower. And by the time they enter the move, by the time they convince themselves of that, the move's over and it's already, and it bounces on them. and they get stopped out only to watch it go right back where they thought it was going to go. Your timing is way off. You can't wait. You got to know how to read this in advance and know what to expect. That's the only way to do this. So anyway, we bounce again. You get a close outside new high. You're not quite back to the EMA, but this thing broke, the trend line, but this thing broke higher above that little double top and turned down instantly and went out the other side. And that's a second entry short. Notice this new low. You're working up. You get a first entry, and you turn up again, and when it broke lower right there, it's a second entry short. Right there at the key entry point. It's not perfect, but it's close enough. Go short right there, especially on that trap that it broke higher and turned down and went out the other side. And of course we do bounce here, and we finally get the break. Now, I meant to... Anyway, we finally get the break, and this is where the correction comes, and you get a couple legs up before it turns back down again. And this is where the next place is where people will mess up. You got to let this play out, so try not to be too early. We start working out, we get a break, we get a couple legs up, and this is basically a lower high. There's like a double top, really, triple top here. I would have liked to saw that. I would have liked to have seen that break higher and then turn down, but it didn't. But being that far away from the EMA and a big downtrend, being that overdue to come back to the EMA, that's probably going to be a good. I mean, we tried to go higher once, twice, 3 times, 4 times right there. It's still aggressive because look, it looks the same right here. You didn't try to go as high as many times here as you did there. But there's still a nice bearish bar, and if you'd have taken that, you'd have probably been in trouble. So it's risky doing this. That's why you're better off to wait on the lower high, which comes here. But now you've moved so far down. You could probably argue for this one to be green, and it would have still worked on a day like today. On a normal day, I'd say definitely don't take this. And you want to see a little more correction after a big move like that down, and see now you get a little more correction. Then it moves down. And look what happens here. You make a new low, and you come up first entry, and you come up here, and you get a second entry short right there when it breaks lower. But your signal bar is very neutral, questionable, almost bullish, bullish, bullish. So you're starting to get all this congestion with neutral type bars, stems on both sides. Even though it works, it's just not a very good setup. So what you might do right here, there's some resistance across there, and you could argue, okay, we made a high, we tested once, we tested twice, and it didn't break lower till right here. So, and that's a fairly bearish bar, but you got all these inside bars with lots of stems, so you might argue that you could go short right there. Again, it's not a perfect setup, but it meets some of our rules, so I'll mark it green. And you see it would have worked easily. I mean, it's good for 7, 8 points right there. But now you got to close outside of this little trend line, a new low, and you try to go lower again, make a double bottom, and you bounce. And there is a failed second entry short right here. This is a double bottom, so you can count that as a new low. First entry, second entry, and if it turns up, there's a failure right there. But this is where that resistance was. I'm not crazy about going long into that. Plus, this is congestive. Look at the stems on both sides, very neutral bars. Not a very good setup. It would have worked, but you see it still failed quickly. And it comes back here and gives you a little better setup. And the reason I like this one, notice we made that low. We tested once, we tested twice. Look how bullish that bar is. If it breaks above here, above this resistance, because we did kind of push through there, so we probably cleaned out the stops temporarily. If we get back in here and start bouncing against it again, they'll probably build back up. But it's like a little clean out. We went through it once, we went through it twice. If we go through it again, we're probably going to go higher. And so I semi like that one. It does come back right here again, makes a higher low, but that's your signal bar, not very good. That's an inside bar, it's neutral, so you just don't get a good setup. Same thing here is what you see right here. It is a repeat pattern. If you recognize that, you may take that trade, but it's a long way away from the EMA still. You hadn't quite got to the top, so that's another reason to maybe like it, but it's just congestive and it's away from the EMA, and usually that means you're coming back to the EMA, not you're going the other way. So it's not a very good setup, but it is a repeat. I mean, it's almost identical to that right there. You shot up and just went sideways till it went up again. You shoot up, you just go side. So if you notice that, and and both of them are second entry longs. Notice that new high right there, because that swings higher than that one. So first entry, pull back, and when it breaks higher, it's a second entry long. And it's a failed second entry short because there's a double bottom. And this is an identical pattern. There's your new high, first entry, second entry. This actually breaks a tick higher or something, but that's still two legs. Still the same thing. And this looks a little similar, but you don't get a second entry and you don't get a failed second entry short really either. So, and then two legs back. This would have been a nice place to go long if you had a good signal bar, but you don't. This bar is kind of neutral. It traded up off its low, but it backed way off its high, so it's somewhat of a neutral bar, and it closes inside this previous bearish bar. So not a good sign. Runs up. Notice you get a close outside. It runs up, tries to go higher, and this actually broke higher and turned and went out the other side, giving you that huge bearish bar on a lower high. I like going short right there because we did have a failed breakout here. Notice we had an overshoot here first, which gives you a hint that we may trade out the other side and get that close outside. And man, this is another one of those great trades that this is what I'm always talking about when I say let the corrections play out. This is a big two-legged correction here. Measure the first leg, and then there's your second leg. And perfect measured move before it shoots up one more time and traps a few people and turns down. That when I say letting the correction play out, this is what I'm talking about. Don't try to get in here too early. Let this thing play out and make sure we're headed in the other direction. Or make sure you're reading it very well and you're a very good price action reader before you start trying to go the other direction again. So if you're a weak price action trader, you might wait till it's way down here before you enter again. So notice what happens. We come down, we try to go higher once, try to go higher twice. We actually make a double test right here, but it's just two up down bars. You made that high, you test it once, you test it twice, but then you make a lower high. This actually breaks higher and turns down. Look how bearish that is. Go short right there. Comes back here, and this actually broke higher and turned down. It's right at the EMA. Didn't really get back to the trend line. And what I did was I drew this trend line off these lows and I drug it up to these highs. And I think this is our arrow pointing down right here. And this is so let me get that out of the way. And this is your two tier. There's your midline I just clicked on right there. This is probably just a little lower. So this is definitely closing below the midline and a double test off the EMA, a lower high after a triple top. Nice bearish bar. Go short right there. And then it comes back, and there's technically this is not a failed second entry long because this is easily got more than a scalp out of it. So technically, but you should expect it to come back to here, and when it doesn't, if it turns down, it's probably going to be a failure. And so notice that double top, first entry, and then second entry. And this actually broke higher and turned down. It's probably going to trap people. I didn't mark it, but if you understood what I just explained to you, you want to take that trade. So it's definitely more advanced. So I'll make it green, but that's a good trade right there if you recognize what's going on. And this is just kind of a repeat pattern from back up here. The double top and the lower high, double top, the lower high. Again, this one actually I think broke lower and turned up and then traded back down. So it didn't really work out that it trapped people to the long side. If anything, it might have trapped people to the actually it might have trapped people to the long, because they might have thought they were outsmarting everybody else that got trapped down here for a moment, only to end up being trapped themselves, like a double trap. But I don't want to confuse people. So but anyway, you got a double top, first entry, second entry, and a big bearish bar that probably fooled some more people. And off we go down again, and then it bounces. And here again, this is what I always say when I'm talking about let this correction play out. Notice you're coming up, and you get this little small signal bar right here at the trend line, key entry point. A lot of you are going to jump in there thinking that you've got a nice safe trade, and it turns up and stops you out and then turns right down. But if you draw that little trend line right there, and that just being a first entry, I'd wait. And notice you don't really get a setup on this one. It's unfortunate. It just, the bottom falls out of it. So you don't want to be getting short down here. So here we come again, another correction. You get a break. You actually get a second entry short right there. That bar's, it's more bearish than bullish, but it's almost neutral. So I don't like it. But now you get a lower high right here, and that bar right there is bearish enough, really. So you could have gone short right there, but just in case you didn't like that signal bar, when it makes this one, that one's about as perfect as you can get. It closes on its very low, goes short right there. This thing just kind of I mean, you'd have scalped out pretty quickly, but it doesn't take off here. And you actually get a flatter little channel going here. And this is just too sideways, though. If you look, you can see all that support across there. You can't go short into that. And finally it pushes through and pulls back and tests it, and tests the trend line at the same time. And there really is a little double top right here, so first entry and then a second entry. But you don't even need to be able to see that. Coming back to that trend line and being the first break of this two-tiered and being that bearish, just go short right there on that one. And off it goes. You make a lower high here, but very bullish bar. You don't want to fool with that. And again, you don't want to be looking for any longs yet. You want something confirmed in the other direction. And then look at us go. You get a first entry, and you push on up, and you get a second entry, and it comes back to the EMA, stays inside that trend line perfectly. I like going long right there. It's actually back inside this as well. That's a nice little setup right there. Trying to get that line just right, but that's hard to do. Pulls back here again and gives you another opportunity, but you don't get a very good signal bar, and then you're just too far away. And now you got your break, a new high, and this thing just runs to another new high. And this one actually gives you, notice this new low, and you're working up, and you break lower right there. First entry, and you turn up on the second leg, and you get a second entry short. And look how bearish. You're at least coming back to the EMA, even if you're going higher here. But this trend line's played out. And even if you're going two legs, which it looks like you do, because this is your first leg up after the close outside, and then there's your next leg, and you can see it's basically a measured leg up, and then it turns down. Then you get a lower high right here, and notice it's a second entry short. You got a new low, first entry short, second entry short. Nice bearish, perfectly bearish bar. Just go short right there. Boom. Now you got two legs down. So But yeah, notice that new low. That low is lower than that swing low. So it's a new low. Plus it's really close enough to be a double bottom. So for that reason, you could call it a new low too, even if you didn't have that break lower there. So first entry, second entry. There's a lower high right here too, but it's too neutral. It breaks higher, then turns, and just kind of closes as inside there. Not a very good setup. Come back. I wasn't convinced this had played out here. You can see you got a little trend working up, and you close outside and you just turn down. You get a lower high right here, but it's right into that double bottom. So you could tick a few ticks lower and it could be over. So I don't like any of that one. You come back here again, and again, you don't want to be buying in this stuff on the way down here. So, but notice this one, you get the overshoot. So hey, and if you look at this, the way, let me show you this too. I didn't talk about this. I got this trend line up here. I drew it off this low right here, and then I drug it to the top right here. And it doesn't look like it's fitting. So I wasn't sure what to do with that. But you can tell that's, well, I didn't mean to do that. You can tell that's accurate. So I just found an equal distance over here. And it turns out it fits on the other side. And so this is probably just a midline. Either way, the equal distance gave me the spot we were going to turn down over here, plus the overshoot. And then now you get a break, and you get this failed second entry. Actually, there's a failed second entry long right here, but it's not a failure until it breaks lower, which is right here, and you get another little trap right there too. It tries to, gives you a little lower high, and it tries to go higher again. Just go short right there. And that really took you into the 2 o'clock hour. There's no more setups here. So this thing's almost 40 minutes. But this was a good day. Since this is Thursday and I may not be here Monday, I figured I'd spend a little more time. This video is going to be super long. And when I get these long videos, it really uses up a lot of memory. This program I use tends to gulp up my memory, and takes it forever to upload and to process and all that too. So anyway, I'm going to wrap it up. Again, not sure about Monday. We'll just have to play it by ear. But if there is no chart lesson Monday morning or Monday afternoon, you'll know that I took that day off. So I hope everybody has a great weekend. I hope you had a great trading week. It's been one of the best we've seen in a long time if you're patient and play it right. I've got lots of emails from people saying they really like this high volatility because they've done well in it, and it's easier. They think it's easier. So if you think that if you can trade this easily, you'll find out that when it goes back to normal, it seems like you'll feel like you're taking candy from a baby. It won't move as much, but it'll be so much easier to slower and so much easier to read, and you get a little more time to make your decisions and all. So anyway, I'm going to wrap it up. Have a great weekend. We'll see you next time. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.